Thank you for joining us for our review of Q2 fund flows. My name is Kyle Gears, and I'm joined by my colleague, Nicole Simos. Thank you once again for joining us. I want to point out a couple things before we begin. Questions can be sent using the Q&A chat feature within Zoom. We will also kick off a recording of the presentation for all of the folks who registered. And there's also going to be a replay posted to our YouTube channel. For those who are YCharts clients, you can actually find a copy of the latest fund flow reports by navigating to the support section at the top of the page in the black toolbar and selecting fund flow reports. I'd also like to mention that you want to keep in mind that the content of this webinar is meant for educational purposes only. It's not intended to be used as investment advice, nor is YCharts acting as an advising party regarding client funds in any way. I want to point out that a recording, once again, will be emailed to everybody, and it will also be available as a replay on YouTube. So make sure that you like and subscribe so you don't miss out on any of our newly released videos. Now, before we get into the flows, we always like to set the scene, think back through what's actually occurred this year. First and foremost, equity funds have garnered assets for the first time recently after 7 months of outflows. A lot of folks are avoiding equity up until recently. I'd also like to note that financials are reporting inflows for the first time since February. And if you think about it, it makes sense because March was when the banking crisis occurred. So now investors are once again getting that comfort level back to invest in financials. We've also had the softening of inflationary environment where inflation, especially over the last couple prints, has come down and the market has reacted well. Short-term bond yields have reached new highs earlier this year, bounced around a little bit, and then the longer yields, especially on treasuries, have been more range-bound. The unemployment rate is on the rise, and obviously the big topic as of late has been the year-to-date rally that's been fueled most significantly by tech. So let's go ahead and jump in and see what the flows are telling us. And I want to start out with the Q2 flow. So I'm taking a look at the visual or the picture on the right. First and foremost, money market has just absolutely dominated inflows. Don't have the exact updated number, but I know we're close to 600 billion as far as inflows or money market assets in total, I should say. I'm sure we're across that 600 billion threshold. However, we have started to see fixed income inflows. You see Q2, about 75 billion of inflows into fixed income. So that's an encouraging sign. We're seeing investors hopping back out onto the curve. Equity is still taken a beating up until June. So that's a good transition to that picture, the visual on the left side, where a lot more encouraging, we see fixed income more than doubling the money market flows. But then you also see we're starting to get some flow back into equity as well. As far as the outflows on the allocation side, you're seeing some big outflows there. And could that be, some risk off type scenarios for a lot of those products being used in retirement or things of that nature? Potentially. When you're looking at the flow data, it's all there. It's basically what you make of it. Just to put things into perspective, I actually want to move over to YCharts and kind of tie in, hey, well, once I have this data, how can I leverage it? How can I communicate with clients? So as we're looking through the flow data for a lot of these major asset classes, what we have here is basically a chart that highlights a couple of those items. So first and foremost, to cover equities, I have the S&P on here as this purple line. Year to date, up 19.2%, following by 60-40 benchmark, which I have for that allocation checkbox. Granted, there could be a range of different equity and bond allocations. 60-40 is up almost 11.5. You have cash in the form of 1 to 3 month T-bills at 2.62%, the ag at 2.24, and then commodities, which you oftentimes see a high correlation to inflation. With inflation coming down, we've seen commodities losing some steam as well, down 3.36%. So as far as the overall asset classes go, that's what we've been seeing, or that's what the flows are telling us. I'm going to go ahead and pass it off to Nicole for the next slide.
Thank you, Kyle. And on this slide, we will be looking at fixed income fund flows for mutual funds and ETFs. We can take a look at June fund flows on the left-hand side of this slide and Q2 aggregate flows on the right. Intermediate core bonds led the charge for inflows in both June as well as the entire quarter, bringing in $41.5 billion in inflows. Short government took a dive in June 2023, which we can see in that tan bar on the right-hand side of the chart, with $1.5 billion in outflows, but did remain net positive in Q2, bringing in around $2.2 billion. Other notable inflow trends in both June and the quarter include intermediate core plus bonds, $22.9 billion over the quarter, long government, $12.1 billion, intermediate government, and high yield bonds. Bond yields rose worldwide in June 2023, with the exception of Italy and Japan, and medium-term US Treasury yields rose in June, while those on shorter-term Treasury bills or longer-term bonds either declined or ended the month relatively flat. As investors leaned into longer-term bonds, they've pulled money out of short-term bond funds as well as bank loan funds. So this could lead us to say that investors might be wondering why they would take risk to the downside when they can move assets into money markets. Also worth noting is that short-term bonds saw the greatest outflows in June, sitting right at $7.02 billion. And Q2 also saw outflows netting at $15.54 billion. Inflation-protected bond funds have also fallen out of favor, with the category posting its 5th consecutive quarter of outflows. Let me go ahead and turn it over to Kyle.
Thanks, Nicole. And as you're looking at the data, obviously it's fairly high level with a lot of the asset class and category data. But if I'm in a position where I have a product to sell, I want to know who the competitors are that are bringing in assets, or what the landscape looks like. So it's another great opportunity to jump back into the platform. And I just want to share with everybody a quick view from our fund screener, where I basically said, hey, I want to see everything in income, every publicly listed mutual fund and ETF. And I want to narrow down to who has brought in the most assets year to date. And that's a quick and easy report that you can dial up within the screener. So I pulled in a couple data points, one of those being year-to-date flows, and then the category name, just so I get a good idea of, hey, with all that asset flow, who are the funds that are seeing that flow and what category are they in? So I can kind of comb down the list here to see those names bringing in the assets. And one thing that stuck out at me, it's interesting, is you have TLT, and you talk a little bit about a lot of the long-term or the long government flows, a little over 12 billion year to date. And yeah, the performance isn't significantly better than a lot of these other categories, but a lot of big bets were being placed there, and it's interesting to see where that money is going. So overall, a great way to gain additional insight as to where specifically those assets are moving. Next, we'll talk through equity flows across style boxes and market caps. And honestly, it's been a pretty similar story over the course of the last 6 months or so. It seems a lot of money is moving out of large value and large growth, and it's all going to large blend. And mostly what we're seeing is inflows into a lot of the index tracking ETFs in the large blend space. I mean, it's the usual suspects as you would anticipate. And as far as looking at the data and getting an understanding of it, once again, we can just go back to YCharts and call up a simple chart that focuses on something like the Russell 1000 indices. How do they look versus one another over certain periods? And I actually took a 3-year time frame. I figured it was pretty interesting. So I'm digesting the flow data, and now I'm trying to apply that to a story or a visual. So I added the chart, chose a 3-year time frame, and that was basically the summer of 2020. And you can see everything kind of moves in lockstep, but then you start seeing the disparity between value. Value starts outperforming growth. Growth takes a dive once we, start getting all that Fed information. And as we see here, I mean, if we start the year, we're looking at Jan 23, pretty big spread there. Value's outperforming growth almost by a little more than 30%. And this is the start of the year. But if we look at where we're at today over this 3-year time frame, growth, as we know, has made up a lot of ground year to date and inching back toward closing that gap. So once again, another way to take that flow data and build a story around it, or at least understand and communicate to clients, why these decisions might be made. Back over to Nicole to discuss a little bit about what we're seeing based on sector equity.
Awesome. Thank you so much, Kyle. So this visual that we're looking at here is displaying June 2023 asset flows versus sector equity, as Kyle mentioned. So on the left, we have this previous month, so June flows. And on the right, we've got all of Q2. So let's take a look at the data here. We can see on the screen here, financials have been struggling. And that's a story that we've been hearing for the past 12 months, in response to the inverted yield curve, which has historically been an omen of economic turmoil. So taking a look at Q2, so shifting your attention over to the right-hand side of the screen here, we can see financials experience a net outflow of $7.03 billion. And interestingly, we saw financials bounce back in June. So on the left-hand side, you can see in that pink bar, left-hand side of the page here, $1.94 billion in inflows for financials. It's also worth noting the sizable inflows into technology. So taking a look at that brown bar to the right of financials here for June, we saw technology brought in $1.72 billion. And then on the right-hand side of the screen here, we saw tech bring in $2.26 billion in the second quarter. While these tech inflows led the recent market rally, we saw notable outflows from energy around $2.74 billion in June and $7.03 billion in Q2. There is a high correlation between commodity prices and inflation. And due to the recent inflation rollover, energy prices came down, which of course hurts the bottom line of energy companies and may signal a sector rotation out of energy. Finally, consumer cyclical saw inflows in June to the tune of around $68 million and $1.31 billion in Q2. Interestingly, the two largest stocks in the sector are Tesla and Amazon. So we might be able to argue that the inflows seen in the sector might be more so correlated with the recent success of the technology sector due to these heavy weightings. Let me go ahead and pass it back over to Kyle.
Yeah, thanks, Nicole. Really interesting data on the sectors. And as Nicole mentioned, I mean, the top three, if you're looking at that Q2 data, tech, consumer cyclical, and communications. And I mean, yeah, they're broken out, but realistically, there's a lot of what many folks would consider tech names. So once again, if we call up YCharts again and look through a couple of those using the sector ETFs, you pull up something like XLK for the tech sector. I mean, it's basically Microsoft and Apple, 22+% of the weighting for that sector is in those two individual stocks. If we switch it up, and as Nicole sort of mentioned or called out, consumer cyclical or consumer discretionary, Amazon, Tesla, same story. We do communication services, look at the holdings there, Meta, Alphabet. So, all those big leaders, as a lot of folks have historically talked about when we're discussing the S&P and the market caps and the weightings and really what drives the performance, or where the attribution kind of lies. Similar situation here is what we're seeing with those three sectors. Next, we have a breakdown of all of the style boxes, flows across different periods, and performance. So basically, if you're looking at the left side of this chart, it's almost a sea of red, except for large blend. That's the only one that's really seeing inflows across the month of June, Q2, and over the last trailing 1 year. And as I mentioned earlier, a lot of that is due to many of those passive index products that are ETFs. Right-hand side, though, you take a look, the performance really isn't all that bad. I mean, none of these style boxes are actually in negative territory for any of these periods, but once again, it's just really been risk off as the leading theme.
On this slide, we will be taking a look at the 5 categories that saw the greatest inflows for mutual funds in Q2. And then that bottom section here is showing us the top 5 categories that saw the greatest outflows for mutual funds in the second quarter. It's no surprise that money markets are dominating inflows, as you can see in the first line at the top of that image here, with a remarkable $173.2 billion of inflows in Q2. A selection of fixed income drivers are also notable, including intermediate core bonds sitting at $27.2 billion of inflows, and core plus bonds at $19.2 billion of inflows. For those investors looking for a more tactical approach, multi-sector bonds is also within the top 5 categories of inflows and seem to be a good solution for these investors. We saw inflows around $4.5 billion in the second quarter. Shifting our attention over to the outflows here. Let's take a look and talk about foreign large blend actually before we pivot there. Foreign large blend did also see inflows of $4.7 billion. So this is similar to the story that we've been seeing here for a while, where investors seem to believe that the US dollar will not rally back to its heights and are positioning with international exposure. So overall, we continue to see a lot of outflows from mutual fund equities as well, looking at large growth, large blend, large value, and it's certainly a similar story to what we've been seeing up to this point in the year.
Next, I'll cover flows that are specific to ETFs, inflows and outflows. So where we didn't see this on the mutual fund side, we're seeing it with ETFs, but large blend was the #1 category for flows in ETFs in Q2. And as I mentioned, a lot of that is from those index tracking ETFs, those passive products. Intermediate core bond is the second. Once again, another category that has quite a few passive products in it that is getting the bulk of that flow. Foreign large blend is also a common theme, similar to what Nicole noted on the mutual fund side. There's been a massive home bias over the past 10, 15 plus years. And a lot of portfolio managers have been pounding the table on the fact that, hey, international is going to be a great opportunity at a given point in time or in the near future. So I think a lot of folks are looking at the dollar index, looking at the current environment in the US, and looking for opportunity elsewhere. Long government, once again, as I mentioned, we saw on the screen TLT bringing quite a bit of flows, especially year to date. Then it's interesting to see large growth as the fifth item here, because we really haven't seen it on an aggregate level across ETFs and mutual funds consistently. And then on the outflow side, large value. It seems a lot of investors might think that large value trade could potentially be over. Not massive outflows, but we're starting to see them a little bit here and there. Energy, once again, had a great run, but oftentimes highly correlated to inflation. Oil prices are still kind of hanging up there, but seeing a lot of outflows from energy. Tips, inflation protected bond. Once again, we see that as sort of that trade being over and moving those assets elsewhere. As Nicole noted, short-term bond a little earlier. Maybe investors are thinking, hey, why not just clip the 5% and have zero downside risk? And then those who are willing to take on the risk, and we're seeing a lot of flow into core and core plus. So maybe rather than being in between, that's the decision that they're making. And then last but not least, actually shout out to my client Spencer on this one. He reached out and was curious about year-to-date flows aggregated between mutual funds and ETFs by category. So let me just go ahead and run through this really quickly. You have money markets, to no surprise, leading the way, followed by core and core plus. Now, if I'm in a sales role discussing fixed income with all that money on the sideline, as I mentioned earlier, this is extremely encouraging. We're starting to see a lot of money moving back into the intermediate space, call it smart money, if you will, but based on the amount of assets out there, especially that have moved out of fixed income, it's starting to trickle back in. We have large blend, which we've discussed in detail, as well as long government. And then on the outflow side of things, like I said, large value. A lot of investors might think that trade could potentially be over, that it ran its course, it did its job, but where does it go from here? And then the other one that is pretty interesting was bank loan. And bank loans did a phenomenal job for investors as rates were rising, and some of them have still done really well. I mean, I think the average for the category year to date is around 5+%, but I think investors are looking at other avenues or other asset classes to find more upside. So we covered all the data. We had a lot of great visuals. For those who would love to dive a little bit deeper into it, you love the data, where can you find it? So let me just run you through exactly where to access it within YCharts. We email a lot of it out, but if you don't see the email, if it hit the spam folder, if you go to the support section in the top of YCharts in the black toolbar, you'll see the fund flows report option. Click on that. That is going to provide you with the most recent flows. Now, keep in mind, they're released monthly for the previous month's data. So we wait till about the 15th to ensure every single last manager has reported and updated those flows. Then we release them. We have a couple different report types, different variations, and a lot of folks will skim past the summary visuals deck. So all of the items that we use in today's presentation are a part of that visuals deck. And we have a ton of clients that use them with advisors, those visuals. So if you want to put them in your own presentation, if you want to just use our deck and run it, great idea to engage with clients and provide them with data that they're always looking for and they'll absolutely appreciate. With that said, we will go ahead and wrap things up here. Greatly appreciate everybody who joined. As always, if you have questions, do not hesitate to reach out to your primary point of contact at YCharts, whether that's Nicole, myself, or if you're working with somebody on our sales team. Looking forward to seeing you on the next Fund Flows webinar. Take care.